disclaimer. Blah, 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 blah. You all read it right.
We're going to sue you.
You're in education purposes. Okay, you got that? Stock, commodity, currency, bond, that's it. I've covered everything. Political summary, we said 6 months ago, 8 months ago, a year ago, that politics is now going to rule the markets and have much more influence than it did in the last many years or decades. And it's not just true in the United States, this is true globally. And we are entering a new political era, and I would say, and it's true in Europe too, just as the United States, and even parts of Asia. And it's a move away from globalization to nationalization is one of the attributes of this new political movement. So, and it's not just in the United States, remember that. And it's not just Trump either. The political pundits make this a mistake, like suddenly if Trump went away, all of Trump's ideas would disappear. And they weren't really his ideas to begin with. So no, someone else will come along with those ideas to represent them. So it's actually a movement, and then in UK it's the UKIP and the Brexit people, and in France it's the Front National, and Germany has the AFG. You know, each European country has a party or parties that represent this movement. And in India you have Modi, who represents the same movement, and he started in the 1980s, and after 30 years actually took over India, his whole party. You have a headache based on Modi. So this guy, Modi gives him a headache. So like, and there's that Duterte in the Philippines. So this is just all over the place.
And those are all countries that have central banks, coincidentally? Or not really?
The Philippines. Well, every European country has a central bank. India has a central bank.
Right, yeah.
You know, these are not, well, I don't know what's going on in Burundi or someplace.
Yeah.
These are like bigger countries.
Right.
So the big news this week, the national debt, this is the U.S. national debt exceeded $20 trillion. We started discussing this in 2008 in this meetup, and it was $9 trillion at that time. That's 9 years ago. And when we started discussing it, we said, isn't this outrageous that it's $9 trillion? This is unbelievable. What a disaster. Now it's 20 trillion 9 years later, and we thought 9 trillion was horrible. So this is bad news. The debt just keeps going up and up and up and up and up. And it's, the U.S. is not the worst country in the world at all. Maybe we're around number 5 or something like that. Japan is far, far, far worse. And years ago, like 2009, I wrote something saying Japan is the biggest country most likely to collapse first. And its debt to GDP ratio is way over 200%. United States is a little over 100%. Greece fell apart when it hit 120%. So Japan went way beyond that years ago, and it's like in the stratosphere. So like one day something is going to give. You just can't borrow and borrow and borrow and borrow, and nothing happens. The piper will show up and want to be paid at some point. So the other news is going to be a fight on that budget. The budget has to be redone. It starts October 1st in the United States, the national budget. And that's always a fight. Trump made a deal with the Democrats who extended only 3 months. People think it was all a year and done. It's not done. It's only 3 months. So it's probably going to come back in December 15th. That deal also raised the debt ceiling, which is a total and complete joke. The debt ceiling was put in the United States during World War I in 1917, and it's been raised maybe 100 times since then. It's just pro forma. No one pays attention to it. People have said, just get rid of it as a joke. Why start to keep pretending? So that's how we got a $20 trillion debt. And you know, something has to give at some point in time. So expect there could be a big fight in December over the debt ceiling. This is only a very temporary measure. And there's a tax bill. He's trying to get a tax reduction bill. The market has had its big rally based on the assumption those big tax reductions are going to take place. So if that fails, which it could in the next few weeks, and everything he's tried up to now has been totally screwed up, the market can have a big drop. So, you know, it's priced in the best of all possible worlds. It it doesn't get the best of all possible worlds, it's going to get very tested.
But presumably it's too late now to actually get it passed, because it wouldn't be effective next year anyway.
Well,
When
so
September.
what, it can be next year or something. I don't see how it's gonna pass at all, it just doesn't make any sense. I mean, he's trying to make a deal with the proposal they have gives huge tax breaks to big corporations. Now, like, no Democrat can actually vote for that. So he says, oh, I'm gonna make a deal with the Democrats. Well, you know, that's not politically tenable for them. So the whole thing is insane. Everything is insane. No matter politics, totally nutty, the Democrats make no sense, the Republicans make sense. They're all living in Never Never Land. So that's gonna collapse, that's a bubble that's gonna collapse. So, we'll just see, they expect problems in the next 6 weeks or so. And the tax legislation, I don't think it's gonna pass. I mean, maybe some very, very watered down version. And the market will not like that if that happens. So, and even a very watered down version is something wrong. So wait to see what happens. So, there was a big blow up this morning. I added this with the wall and DACA. In case you're having DACA, deals with illegal alien children. And this is something the Trump people are totally opposed to. And he met with Nancy Pelosi, he met with the Democratic leaders, and Chuck Schumer. He was on the senator from this state. And they came out and gave an out, oh, he's going to keep DACA and not have any funding for the wall. Well, the Trump people exploded on Twitter, and I'm on Twitter all the time. They absolutely exploded. You know, I mean, this is like the dumbest thing he could possibly do. So that's not likely to have, there's going to have to be pushback on this. So that deal is going to fall apart. So that's a big, big mess that just happened. So the hurricanes are actually big news investment-wise in Texas and Florida. I was just talking to someone about that. It'll take months of rebuilding, maybe years actually, in both like the Houston, the coast in Texas and in Florida itself. And the cost is estimated right now to be at least $200 billion, which is a lot. And these costs are usually underestimated in the beginning. They just go up and up and up. And $8 billion has been allocated in this deal with the debt ceiling for something that's going to cost $200 billion. So obviously a lot more money has to be coming forward somehow, some way. So that hasn't been done yet. So, you know, $8 billion is not going to, it's going to last 2 weeks. So in investment terms, you should think, well, what stocks are going to benefit from this, or commodities? I mean, obviously home building stocks, timber stocks, huge numbers of cars were damaged, especially in Texas, but also in Florida, so used car companies might be benefiting. There's a list of possibilities of what can happen. You can look at those for possible investments. And the impact of hurricanes, I want to warn you about this. When Katrina came along in 2005 in New Orleans and wiped out southern Louisiana, nothing happened in that quarter to GDP. And the market had a big rally, it was all excited, oh wow, it didn't even impact the economy. The next quarter, GDP dropped like a rock. So the GDP figures actually lag. They're like, you know, like a few months behind times. So the fourth quarter GDPs, which ends in December, are going to be really hit. And you're going to see the third quarter, which ends at the end of this month, is going to look like okay, or not so bad, and the market's going to celebrate, the news is all going to come, oh wow, we missed that bullet, and then you're going to get whacked the next quarter. So watch for that to happen. Now, okay, I can move this some more. The market summary. Stocks are still going up, as David said, the Dow hit an all-time high. They're sort of inching up, they're not like zooming up. The small caps, which are like the Russell 2000, they're not doing so well, they're actually showing weakness. And that's always the case. This indicates the bigger market is not doing as well as the big stocks are telling you. Emerging markets started rallying 2-3 months ago for some reason. Might be related to China, because China is, and if you remember the end of China on David's chart, we're going to see that chart. Other things started rallying with China at that time. We're going to see several charts. They all have the same picture. We'll see that in a few minutes. Global interest rates are declining again. David showed that his chart, they bottomed last July, globally, everywhere. And they went up to like, at the beginning of this year or thereabouts and sort of going back down. They're nowhere near their lows. The US dollar has the worst chart of anything we're looking at tonight. It has been just going straight down. And there's nothing that looks like, and maybe it is going to bounce like David says, right now there's nothing to make it look like it's going to bounce. Now a crisis would do that. You know, if Korea blows up Japan or someplace, you know, some like small town in California or something, then the dollar will run. Now the big winners are base metals. Base metals are copper, tin, nickel, lead. So they've suddenly had rallies, and they've rallied right along with China. Their charts look very much like the Chinese charts. And this like surprised everyone. Well, copper, of course. They surprised everyone. But they've been very good investments, and they still do. Now gold is about to have a breakout. If you look at the chart, you actually see that on David's chart too. And if it does, gold leads the precious metals. Silver will follow it. Silver's still sort of dead. So you've got this lag time to potentially, if you see gold having a breakout, to buy silver really cheap before it starts going up. So remember that. And of course you could buy gold when it goes up too. Now the dollar's been going way, way, way down. Gold has not gone up nearly as much as it should have based on how much the dollar's gone down. So there's also a lag built in there. More should be coming. So like there's a lot to deal with in these two things. And we actually showed the dollar to not the last minute, the one before that, where the dollar peaked and other currencies bottomed in early 2017, and gold bottomed and silver bottomed. We went through several charts. It's a mega pattern, it's a big pattern, it's not one thing. Oil is in a holding pattern, it's basically going sideways, and no, it's not going to hit a new low, David. So we'll deal with that later. And I'll try to follow oil really, really, really closely. And as we said, almost all assets in the world globally are in a bubble, except for commodities. Commodities are very, very cheap, whereas bonds are like unbelievably bubble-licious. Stocks are overpriced, real estate is overpriced. So you have like almost all commodity assets are overdone except for commodities, which are very cheap. And Bitcoin is the ultimate bubble, and David showed you the chart. And they closed the market in China this morning because it dropped like 13% in the morning. And then they closed the market and stopped trading. So this is like in one day, not one day, but like 2 hours or a few hours. So, and bubbles are like that. They can go up and down like massive yo-yos. So here's the Dow, and what we have in all these charts, I want you to look at. This circle thing is election week. These are weekly charts. So every chart will have a circle of what happened election week, and you can see what happened afterwards. Now notice the Dow started rallying, and that's true of lots of stocks in the United States. You see this perfect bullish pattern. And the perfect bullish pattern is the yellow line is above the blue line, above the red line, and they're in parallel. And so this is the perfect rally. So there's nothing that looks like it's going to be disturbed at the moment. And you also see this RSI, the maximum's 80, it hit 80 twice. Now that's okay, it can actually hit 80 over and over and over again and keep rallying forever. If it goes over 80 though, then it's gone too far and the end will eventually come. Also this black line here on this is the trend indicator, has been at 40, usually 40 is the maximum. It's hit 40 and stayed there for months. So like, and you know, nothing is negative about this chart. So, and here's the S&P. If you notice, it looks almost exactly the same. This never has hit 80, so I mean, it's yet to hit 80, so there's more to come. This did not hit 40, it's at 30, which is fine, that's not overdone. So this can go on forever too. And notice that almost perfect parallel pattern. Not quite. Here's NASDAQ, it has that parallel pattern too. It hit 80 once here, so we can do that again. This is bullish, this is at 30 something, that's fine, that's not what we've done. This is a buy signal, they're all on buy signals. And the buy signal is the blue lines over the red line, and the black line is crossed from below. And it's stayed high. So a Russell is like a little thing, it's a small cap stocks, it's a Florida market that it's not in parallel, that yellow line is weakening. It looks like it's gonna fall below the blue line, that would be quite negative. This line is nowhere near 80, but it's actually fallen below 50 last month, which is negative. Below 50 is bearish. This is still above 0, which is fine, but it's sort of weakening. And this line, all of these lines are together, which is it's looking to reset the trend. Now the trend was bullish, so that can reset the bullish, but it can also reset the bearish. So if this rolls apart, you have to then worry about the other markets that are going to come later. This is your canary in the coal mine. And there's another canary in the coal mine, which we'll see at the end, that we always look at. Now, okay, let's go overseas. The FTSE is the British market. And we see that looks sort of like the Russell. It's in sort of good shape, but weakening. And this is very interesting. This RSI is actually, since last November, it's gotten weaker. This is like a market that then wants to go down. So this market goes really down. And we see here the trend line is like, everything is like as low as it can get. That's very negative. So anything could hit this market any day. And it could just go kaboom. That's the British market. Now the German market, we also see that yellow line is sort of trying to cross that blue line. And we see this line RSI here got below 50. We see these lines are all coming together here, so weakening is taking place, and it hit 40, which would be the maximum, is going down. So this isn't as potentially weak as the British market, but it also could get hit. The Nikkei in Japan, now I always talk about this peaked in 1989 at close to 40,000, actually 38,000, 39,000. And there's always someone in the room who left. He's not here, but he's just here. And he wasn't born by then. So his entire life, the Nikkei has been in the bear market. So they say invest for the long term. Well, you better live long enough. Japan is the longest lived country on earth, fortunately for them, because they have to live forever to make their money back from their bear market. So you could have started your job in Japan in 1989, bought at the top, and still have lost half your money. And what's that, 27, 28 years later, 27 years and a half. So you could have worked for almost your whole career and getting ready to retire in the next few years and still be 50% underwater. So think about that when they tell you stocks always go up. Well, in the very, very long term they do. But you have to live long enough for that. So, and we may experience this here one day ourselves. Now notice this is this has gotten below 50 here, so that's weakness. This trend line, if it's very low, indicates no trend, and 10 is super low. So this is not in a rally. It's trend indicating there's no rally going, there's no structure. So this could also go kaplunk at any point in time, especially if North Korea nukes Japan. And they just sent a missile. News came out a few minutes ago that they just sent a missile over Japan again. So that's recent news after you came here. So they could easily nuke Japan. North Korean guys crazy. Japan is within their reach. So the Brazilian market is fascinating. It doesn't make any sense. Brazil and Russia, you can make the most money in a crisis. I mean, they have big drops, and then after big drops, they have huge rallies. So in any crisis, you should look at Brazil and Russia immediately. And this has suddenly become bullish. Now notice this tail movement, a movement up. You're going to see that in China, and you're going to see that in base metals. You're going to see that in several charts throughout the world. So I think they're all related somehow to China. This is quite bullish. Now you notice the gold line is above the blue line, is above the red line, and that arrow points to where the gold line moved above into place. So that's a bullish pattern. That's fine. The moving averages are fine. And the RSI, that's above 50, so that's fine. The MACD is above 0, which is bullish. This is a buy signal. The red line is above the blue line. The black line is in the middle, moving up. So this is very bullish looking. Now notice that just sort of turned bullish 2-3 months ago. let's look at China. This is like, okay, this is more than, this is about 3-4 months ago, this started this straight move up. This is also bullish, the gold line's above the blue line, above the red line. Here is the cross that made it bullish with that arrows pointing. Everything else, this is above 50, this is above 0. What you need here is for this black line to cross this red line, and that's a buy signal. That the bullishness continues. So what's causing, something's going on in China, probably money pump, various forms of money pumping. They're always doing that. Here's India. India's been very bullish of all the brick markets. And notice it rallied after the election continually. That you've got the gold line above the blue line above the red line, but the gold line is too far above them. It's overdone. There needs to be a market drop to sort of get the lines closer together. And notice they're not perfectly parallel either. So that's not a, that's something that will correct, and that market wants to go down. Also, this hit 80, which can mean it's done. This hit 40, which can mean it's done also. And this doesn't mean the market's going to collapse. It just means it has to have some pressure let off so it can go down. And there's a lot of problems between China and India, by the way, military problems, which we get no news on. And they're like trying to fight each other. So here's Russia. Remember this chart when you see the gold chart. Notice that's about to have a breakout also. And if this red line is trying to break above that, that will be a breakout. And you see the gold line has just crossed that blue line to put them all in the correct order. This across the 50 line here, this across the 0 line here. This is actually a buy signal, a perfect buy signal if it keeps going up. You have the blue line over the red line, and the black line is crossing over this blue line. So this is very bullish looking. It's like Russia looks like it's ready for a breakout, like literally tomorrow, the next day, next week. Now remember that chart when we see the gold chart. This is the dollar chart. I told you it was negative. This is the peak in January, straight down. And the downward movement has accelerated in the last few months. So it's not, if the stock market is going up and your currency is going down, you're not actually making any money. In fact, you're actually losing money. The Dow and the other indices are not going up probably fast enough to compensate for the dollar moving down. And we pointed this out with foreign stocks, with Brexit and the UK. The FTSE was moving up a lot, but the pound was moving down a lot. So if you calculated the real movement, it was 0. Because the downward movement in the pound was enough to take away all the upward movement in the FTSE. So it looked like the people, oh, the FTSE's rallying, oh, we're making money. If you live in Britain, you're not making a penny. So like you can't just look at the stock value, you have to look at it in relation to what's happening in the currency. So the U.S. market is not doing quite as well as people think, once you look at the dollar. Now notice that not only is this that blue line crossing the red line will be a sell signal, a major sell signal. Notice that this stays below this 50, this yellow line, that's negative. And you will have the red line above the blue line above the yellow line. Once that blue line crosses, that's the perfect bearish pattern. So the dollar doesn't look like anything that you will have to have a crisis for it to go up at the moment. Some event. The market is extremely event prone at all markets at the moment. An event like, North Korea blows something up, or locust plagues hit, whatever. And so nothing is going to make this go up yet. I mean, this has hit 45. That's really high. It's above 40. So, but what can happen with this trend line? It can go back down to say, 35 or so, and then go back up. Not quite as high as 45, but the dollar still goes lower. So this is, unless there's some event that makes people buy dollars, and it's in the international crisis, I wish it could be dozens, and nothing's going to make the dollar go up right now. I mean, if the Fed raised rates a whole point or something, really skyrocket. But notice this has not hit 20, which it needs to do to hit the bottom. It's like we meander up, we meander around it. This can meander sideways, so tune in, we'll wait till next month to see what happens with the dollar. But it's been extremely negative. Now, on the flip side, as David said, the euro is the opposite of the dollar. That's been going up as the dollar's been going down, and the dollar peaked here, the euro bottomed, right here. So, and then it's been going up, and this is where the China rally began, right here. So you see this yellow line cross the red line, that's a buy signal. And you're seeing the blue line is crossing the red line, which is a second confirmation buy signal. So the euro, just as the dollar looks really, really negative, the euro looks really, really positive. Now notice this has gotten next to 80. It's not hit 80. I mean, you can't quite tell by this chart, but it's meandering below that. You can do that for a long time. And this has gotten over 45, which is a really strong trend. So it's you know, it can't go on forever. I mean, it may have to do some sideways, but just like the dollar, they have to do some sideways. Now the pound collapsed after the Brexit vote, and it's been meandering around this 120 level. It's starting to turn bullish. It's very slow. You see the gold line has moved above the red line. The blue line has to move above that red line, and the red line has to start going up. So this will take a few months, 2-3 months, I think, reposition. But it's trying to turn bullish to go up. And the rest of the chart confirms that. Now the franc moves with the euro, except it's actually worth something and the euro isn't. So you can see the same pattern, it's very choppy. Actually hit 92 to the dollar, and that's 0.92, which is really cheap, a really good deal. And in the early 70s, it was 20 cents to the dollar. 92 was 92 cents to the dollar. And that we now consider that good. And it went as high, almost as high as 140. So over time, the franc had rallied, because the dollar has lost money. And everything, this chart's fairly bullish, the RSI is sort of neutralish. But this is a strong uptrend, indicates a strong uptrend right here. The Japanese yen is sort of going sideways. It's trying to go, it hasn't quite turned bullish yet. You need that yellow line to go above the red line first. And then this is trendless right here. So the black line is very low and below everything, in any case, no trend. So nothing's, we can say nothing's happening. The Australian dollar, two things you should always pay attention to are the Australian dollar and the Swiss franc. The Australian dollar moves with gold. And you'll see it has a somewhat similar pattern to gold if we could lay it out over time. And this is like extremely bullish in the short term. This gold line has crossed both of these lines and going way up. And the gold is above the blue, above the red. Now it's not parallel. We'd like to see it move into a parallel fashion. But this has become very bullish in the last 2.5 months. And just like gold has become very bullish. It's not a coincidence. So, and this is a buy signal right here. This is over 50 is bullish, over 0 is bullish, and a buy signal. So, and then the moving averages are very bullish. So expect on the Australian dollar to keep going up. Okay, oil. Oil is like aggravates me to no end. Is like it was just a report out that OPEC's oil production fell last month. So that's extremely bullish. Well, because there's two factors you have to know. There's all the increase in oil production, and you hear, oh, it came from U.S. fracking, U.S. fracking, U.S. fracking. That's actually not true. It did come from fracking. Half of it came from the Middle East, increased production. Half of it came from fracking. So, like, they have now cut their production. Now, meanwhile, demand has grown 1.6 million barrels per day every year since 2009. So demand is growing really, really fast and strong. So if production is cut down, pretty soon you're going to have a tight oil supply. And then the price will really go up. And expect that by next year. In fact, you're probably going to see like very strong increases in oil next year. The low was actually $26 late January last year, not this year. So like it's hovering around 50, that's still double its low price. So like I suspect it might go to 100 by next year. So you're going to see shortages in supply. And the only thing that'll mess that up is like a big economic crisis or, someone blows up all the factories in the U.S. So this is